Hello and welcome to the Digital Digest, your weekly breakfast of insights, tips and tricks and general information that will help anyone trying to move things forward in this digital world of accounting. This show is sponsored by Approval Max, the advanced approval tool for all areas of your business, now including both capture and pay. It's also brought to you both by the Digital Disruptors and the Digitals and the Cruel World podcast, which are pushing the boundaries in the digital accounting space. I'm your host, Ryan Pearcy, and this episode is on case studies of digital transformation projects. And as ever, I'm lucky enough to be joined by John Toon. He's had the chance to interview me about a case study, and I'm now going to grill him and find out what he does, how he helps businesses. So, John, let's run through an example of a business that you've helped. Describe what that business was.
Hi, Ryan. Yeah, thanks for that. So we we were working with an organisation that was a charity based in Manchester, and effectively had come to us. I guess with the usual kind of pains and problems that you find typical in this sector in terms of, we're using, an outdated piece of software for their general accounting. They were really struggling with a lot of manual processes, particularly the collation of, their month-end accounts and the preparation of financial statements at the year end. And, also had very manual processes around, purchasing, payments, etc., and approvals, with a reasonably departmentalized structure within the organization. And just to top it off, they also had a trading entity as well, because there were some trading parts of the charity that they had in a separate organization. So they were actually trying to do this for two entities at the same time.
Yeah, I mean, that's, I guess, more and more standard now, that trading entity that comes along with a not-for-profit business, and always adds a bit more complication because they've got different reporting requirements, and just adds to that consideration of intercompany recharges as well. So what was the trigger? What I guess caused them to reach out to you?
So I think the trigger really was that they brought a new finance person in who'd come from outside the not-for-profit sector entirely, actually. So come from a commercial background and had worked for Big Four prior to that. And I think that she'd come in, she'd arrived just as the first year ended and the subsequent audit was happening. And I think the experience of going through that with sort of very manual records and struggling to kind of pick up the information easily and answering the questions that were thrown her way was like a really significant trigger. And she knew that there was a better way of doing things, but didn't have the skills herself, probably, and also probably the time to kind of implement some of that and make it successful. So I think that frustrating experience and realizing that things could be done better was a real trigger point.
Yeah, no, I can appreciate that. I've had lots of clients that have gone through that audit process and like, there must be a better way of doing this. Why am I losing 2 weeks of my life helping an auditor? And if you do modernize your accounts, it can change that experience entirely. So talk us a bit through your process. How did you, I guess, start that conversation? How do you kind of go through understanding a bit about them to the point, I guess, of beginning work?
Luckily for me, I've worked in the not-for-profit charities sectors before, so I've got some experience of the requirements in terms of fund accounting and managing donations and that kind of thing. So that always helps. But I mean, our process is, I guess, fairly standard now in the industry, insofar as we always start out with trying to understand what the pain points are, and there were quite a few in this instance, but also how digital did they want to become in terms of processes and things. They had payroll that's effectively outsourced to the local council, so that was an area that we couldn't go after, couldn't touch, and they didn't want to change. But there were lots of other things to go at, and they had already started some digitalization projects of their own internally. So, for example, the commercial part of what they were doing had a shop and had an online presence, which was on Shopify. But because that was effectively being managed without any connection to the finance system, that was being sort of run and supervised outside of the finance team. And then they would get these Excel reports and stuff that they then had to sort of aggregate up to do the wider reporting. And that was an area of frustration, including keeping on top of a relatively small amount of inventory and other things. So there was lots to go at. So our initial thing was really just what we always do, which is always an introductory meeting, which is usually over about an hour and a half tops, typically, just to kind of get a feel for the entity and what's going on.
And do you charge for that, like, introductory meeting?
No, typically we don't, just because we feel that it's a good way of just making sure that, number one, we've got a client that understands what's going to be required and the potential costs. So it means that we're not going to sort of waste our time on that. But also it gives us a feel for what the project might be and whether or not we can deliver it as well. So I think that's quite important for us to get a bit of a feeling.
Yeah, cool. And so then I guess at that point you're doing a proposal, setting out how you're going to work, you engage, and talk us a bit about that deep diving, the potentially what some people do as process mapping or just that kind of Q&A. How did that work?
They're fairly local because we're in Manchester. We did that face to face, and literally sat down with Chrissy, who was the finance person there, and went through the processes. And then as we dug into some of those processes, there were other people in the organisation that we spoke to as well, in terms of people that ran the shop and ran the stock management and that. For example, it tends to be more of a sort of, I guess, an interview type style that we work on. We obviously take notes and we keep an eye, keep a note of the key pieces of information that are relevant to the processes that they have. But also at the same time, normally in that scope, we're thinking about what those processes might become as well. And quite often we can, we can sort of discuss that with them in terms of sort of saying, like, this is what you've got now, this is what we understand is happening, and this is kind of how we'd propose it might work. And does that work for them in terms of, their understanding of the roles? We don't typically do very detailed sort of process mapping documents and things to provide to people unless they ask for it. I guess we have a similar approach on the software choices and the options that we, discuss with them as well. So, this was a business that was, this was a charity that was using, I think it was Sage 100, if I remember rightly, for the kind of like day-to-day accounting, which is really, really old school. And it, given they already had Shopify and a few other things in place, it felt like a really good fit for Xero, which is where we ended up. But I mean, we discussed with them about, QuickBooks Online and Sage Business Cloud and a few other options as well. But again, they were familiar with Xero from previous role as well. So it felt like a good fit. And we didn't feel a need to go through detailed proposals of every sort of system that we would suggest. We just managed to discuss those, with the finance person and, come to that conclusion along the way.
So how you're presenting that then is a much more flexible, fluid way of, rather than here's a report, here's kind of the summary of it, or you're going, okay, let's have a meeting, let's discuss the options and talk them through. Yeah. Is that right?
Yeah, it's pretty much always like that. I mean, we do reports and we can do the process mapping and give those visualizations and stuff. But more often than not, we tend to do it in a meeting. We might preempt that sometimes with, before a meeting, we might record some short videos on things. Again, it just depends. It depends on how long that follow-up meeting is going to be, and also depends on the scale. Because if you're talking to, say, one person, it's usually easy just to do that sort of like this or face-to-face. If you're talking to multiple people, we often find that it's easier to have shared some stuff in advance so that they can at least try and consume some of that, particularly where there are bits that are relevant to particular people in an organization. So, in say like a trading business, we might have an ops manager or a warehouse manager or something. They're not interested in the whole finance picture, but they might be interested in key parts of what you would implement.
So how do you cover yourself then? Like, say that you're highlighting it, you make a recommendation, or you're highlighting things for them to consider. They could come back and challenge that. How are you covering, I guess, the work you've done and the recommendation you provided? Is that in the engagement terms?
Yeah, I mean, we cover that in the engagement terms, and I mean, I guess we're very open and honest throughout the process in terms of making suggestions, making sure that people are comfortable. We do lots of work around arranging demos of products. So where we were to present sort of 2 or 3 options, we will arrange demos or at least show. I'll show the demos ourselves if we've got the access to the products and the capability to do that. So it tends to be very collaborative, I guess, in terms of like the way that we work, and so. That's always worked for us. We've never had, pushback, and where we have had experience where maybe we've suggested a product and then gone down a route of early stage implementation and realized it's not worked. We can also sort of step back and say, actually, do you know what? We've got into this and we've realized that we either missed something in the scope or something's changed which doesn't work with this product in the way that we're anticipating. And so, we tend to be pretty open about what we're doing and very straightforward. We're pretty good on anticipating the costs. So when we are scoping out what we're going to be doing as well, we very rarely have surprises in terms of running over by, hours, even, let alone days. And again, if there's a change in requirements or a change in process, we can articulate that pretty quickly and make sure that's accommodated for.
Yeah, and that comes down to a lot pricing comes down to experience. You've been through it. You kind of know how it will work and what may come up, and build those buffers in. And I guess the other thing is it's subjective. I think a lot of people look at digital transformation, they think it's a science. This is exactly how it works, and this is the perfect solution. Whereas quite a lot of it's an art form, because you are selecting systems that are very similar, and you have to find the right one that fits for the business. And that may not be not just their process, but also the people, how willing they are to change, how they can adapt to different user interfaces. So yeah, it becomes more of an art, and that collaborative conversation is a requirement to kind of tease those elements out. So talk a bit through, what the end solution was and why you came to that.
Yeah, so I mean, as I said, we had two entities. We had the main charity, and then we had a subsidiary, which was the trading part of the charity, which was mainly an on-site shop. Like I said, had an online presence with the shop as well, and then also we're renting out some space in the charitable in the buildings that the charity own, and so. Our approach was fairly similar, although there was some nuance between the two in terms of, we fairly quickly landed on Xero as as a bookkeeping choice. They also had sort of restricted funds and, like I say, some grant income and stuff that was recorded in the accounts. And so we knew that we could implement both Dext and Approval Max to kind of mirror that. And again, we chose Approval Max, I guess, because from a budgeting point of view for using that across two products compared to maybe something more complex like maybe Lightyear, for example, it wasn't going to be affordable for them in the longer term, and so that worked out. Approval Max do not-for-profit discounts as well for those types of clients, which obviously helps from a pricing point of view too, and we knew that we could use some of the functionality, the complex approval functionality they had in there, and Chrissy, the finance person at the charity, mapped out their approval processes, and then we put that into Approval Max with some testing on site for them, and that subsequently morphed. So we did a relatively, I guess, straightforward set of approvals, if you like, which were all value related or department related, essentially, to begin with, and then we started to bring in some more complex stuff around budget, but also then started to lock approvals down depending on nominal codes and some other things which were then relevant to operational budgets. So by the time we kind of completed it, they had quite a complex setup in Approval Max, which not many other approval systems can accommodate without stepping up to a fairly significant change. For the trading business, we kind of replicated that, but their approval processes and things were less complex as a consequence of the type of organization it is. But like I said, they had Shopify set up for POS and for the website, and that was very manual. And so we actually explored the kind of the three main aggregators, which is Dex Commerce, A2X, and Link My Books, and went through that with Chrissy to sort of show, and the person that managed the shop, show them how those products worked. Show them the types of reports and the way that the integration works. We kind of connected their data up to the demo company to show how it flowed through. And we ended up picking Dex Commerce. And the reason that we ended up picking up Dex Commerce was that the shop would not just sell the rubbers and the pens and the pencils and whatever else is in the shop, but they would also collect donations, which had to be accounted for and managed in a slightly different way, because they would be recharged on. There's no VAT on them, etc., etc. And that level of complexity, we just ended up finding that Dex Commerce seemed to be more suited to managing that. And then the final things that we brought together was we actually implemented Mayday for the two entities. Nice. Because there is some intercompany recharging that happens, because the trading entity will recharge its income effectively up, but also where it's collecting donations, that needs to be passed up to the charity. And then the charity had some costs which it passed down to the trading entity as well, for shared space and rent and rates, etc., etc. So there were things to manage there. And then the one thing that I really liked, because it was implemented just as we were doing this, was the new bank reconciliation feature that is it called Bragg, isn't it, in Mayday? Yeah. Because they did used to get these things where sometimes someone would pay into the wrong bank account, and you have to reconcile that across two entities. So we brought Mayday in, and then the final thing that we brought in was SIFT for reporting purposes. And again, that was one of Chrissy's really big sort of bugbears, was that because everything was so manual, it used to take her a long time to pull together management information for the two entities and then consolidate that up to present to the board. So we brought in SIFT. We did actually explore a couple of other options before SIFT, but it ended up that that SIFT was sort of like the way to go, it felt, for us. And again, from a cost point of view, it was relatively inexpensive for them to implement off the back of our partner agreement and stuff. Yeah, so we got full consolidated reporting for them out of there with new nice visuals and stuff, well away from the kind of fairly standard Excel type stuff that was being produced beforehand.
It also helps tie them into you, right? Because like they're on your subscription, you basically have to some extent control over their reporting, and they're less likely to want to move because of the pain of it. But with any of these transitions, and obviously there's a lot going on there, there's always challenges regarding the internal team. Like, can they adapt to the systems? Are they engaged? And sometimes they do it and they've realized they become so efficient. It's like, well, what do we do now with our day job? So was there any challenges around that?
There were one or two challenges. I mean, there were two people, like I said, there were two people in finance. So we had Chrissy, who was, I guess, effectively like finance director, if you want to give her a role. And then there was essentially another lady who was in a bookkeeping role. As it happened, she wanted to reduce her time in the organization anyway. So I might get this wrong, but I think when we originally started out, she was doing either 3 or 2 days and wanted to reduce it by 1 day. And so as a consequence of making some of these changes, she could do that because we had managed to remove quite a lot of the very manual work that she was doing beforehand. The other things where we didn't really get pushback on, but it was like opportunities, was that, you know, a lot of the people in the organization, whether it was submitting expenses or whether it was approving things, were frustrated because those processes were so manual. And, you know, there wasn't great visibility over who was accountable for what, and whether or not it was stuck with someone in, I don't know, the grant team to be approved, or whether it was sitting in finance waiting to be approved. And that was an area where we managed to solve that by implementing Approval Max as well. And I think the only other area where we got a little bit of challenge was actually on the implementation of Dex Commerce and just the reporting part of that, because we actually identified a couple of small like VAT errors as a consequence of going through that setup, and there was a couple of categories of items that were for sale where VAT hadn't quite been accounted for correctly, so we had to go back and correct that. And it was all relatively small beer, but it just meant that it was one less thing for people to worry about, because it meant that we were on top of things, and you know, things like the collection of donations was much more clear. And you know, they didn't have to worry about, oh, was VAT being charged on donations by mistake and things like that. So there were lots of kind of relatively small incidental things that came out of this as a consequence of changing some of these processes. And then the net result was that, you know, the client was really happy. You know, Chrissy in particular was really happy because it meant that the lever arch files full of paper that she used to have to keep every year were gone. You know, everything was digitalized, and also it meant from a lot of the internal things that charities do in terms of, you know, reporting on grants, reporting on restricted income and funds like that, was that it became much more clear about where they were. And in particular, it meant that Chrissy could, you know, forecast forward more effectively as well in terms of what their cash flow looked like, because this is a charity that's reliant on, you know, not just public donations, but also grant income. And that part of the sector in particular has taken quite a battering in recent years, because grant-making bodies have been pulling back funds in quite a lot of instances.
Yeah, definitely. Like the not-for-profit sector is one that is needs these changes, right, and benefits massively, especially from the approvals area. It's a key focus, and pretty much you need an approval tool to be able to roll it out, whether that's on its own or inbuilt into a specific expense management app. And there's, you know, it sounds like the client in this case was like not open to change, but actually driving change, and so finding the perfect partner that can help it. And what I love is that a lot of these digital transformation projects tease out these compliance issues. We've recently taken a client from another accounting firm, and we identified that by basically integrating their sales channels, that they just weren't looking at VAT on other countries like properly from an accounting point of view.
Had that.
So and so we've had to help them with that, and it's, you know, we've brought in our tax advisory team to assist. So there's so much more additional work that can come out of this, and that's what benefits other accounting firms and has a deeper engagement between you and your clients. But we've dived into this. Thank you, John, for running through it. I think this is a great place to wrap up this week's show. And hopefully this episode provided anyone that's been watching valuable insights that you can take forward. Please do check out the show notes for links to the digital disruptors and our wonderful sponsor, Approval Max, who both have a capture and pay now in their tool, not just approvals. Please do subscribe to our YouTube channel if you want to catch any future episodes, and we will be launching these live in the near future. So if you want to, collaborate with us, come in, ask us questions, challenge us, please look out for the live shows that will be coming in the next few weeks. We look forward to speaking to you soon. Thank you.